Welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to take your stock-related questions tonight are Alex Duys from Umthombo Wealth and Graeme Körner from the Körner Perspective. Please be sure to send your questions via email at stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. Let's actually start off with the kind of rotation that we're seeing in the US right now after the big hype on NVIDIA, where it became the most valuable company. Now, obviously seeing a pullback, and obviously that filtering through to the rest of the tech sector there in the US. Alex, I want to start off with you. Was this as expected?
Yes, good evening. Look, I mean, I think they go up a straight line forever. There has to be some sort of consolidation, profit taking. And I think what we've seen there is pretty much evidence of that. There's no, I would say, structural new news that would say that the trend has reversed at this particular stage. But we have cautioned before that valuations are excessive. I mean, NVIDIA is trading at, I think, prices sales at 24 times. So pretty much that means there is enormous sensitivity to any estimates on the future. So if your growth rate drops from 150 to 130, for example, there's a big impact on the valuation. So that's something you still need to be cognizant of. But I think in this particular case here, it's just perhaps predominantly some profit taking and we see a rebound again in the near term, but who knows? But yeah, just be cognizant of those valuations and the risks involved there. But I'm no panic at this moment in my view.
Yeah. Graeme, would you say that this is a healthy pullback?
Yeah, well, I mean, the Nasdaq is off, 0.4%, the Dow up 0.9. So obviously, as you were just discussing, it looks as though people are maybe tilting into more traditional stocks. And if you look today, some of the best performances on our market came from some of the UK defenses. So, a company like British American Tobacco and obviously Anheuser-Busch also having a very good day. So you get the feeling the market is sort of tilting away, and maybe some people are saying, look, nobody's going to phone my golden telephone or ring a bell or tell me that the Magnificent Seven have done their thing and maybe time to pivot into more traditional stuff. So I think, as Alex is saying, probably some people just a little bit fearful of looking down right now after the rally we've had. But I think my problem is consistently, the Magnificent Seven are very different businesses. One of them, for example, is a media company. Another one is effectively a utility technology company with some very exciting storage businesses, and others making really fantastic chips. So they're very different businesses, but we tend to put them all into a bucket. And I think that's maybe more than anything what's causing a little bit of anxiety. But I think for me, the real thing is, as Alex said, the valuations on some of these tech stocks, we'll just call them techs for now, are a little excessive. And I think people are just feeling a little bit fearful after what has been a phenomenal rally. I mean, if you look, on even on a year-to-date view, the Nasdaq, in spite of some concerns around growth and the phenomenal run in some of these, is up 17%, and on a year it's up 30%. So I think it's probably just people moving a little bit closer to the door and opting just maybe to buy slightly higher visibility stocks that they feel might have underperformed and are looking cheap on a relative basis. But the question is, what is your relative proxy? Is it NVIDIA or what is it? Yeah.
Yeah. Well, actually, a sector that did a rally today is the PGM miners, even Anglo American up almost 5% on the day. Of course, a sector that has induced a lot of anxiety for investors, but seeming that some are nibbling in as these stocks are quite cheap. There's a question here. Can the panel give me their view on the current performance and future performance of Anglo American Platinum? I'm not sure about the future performance because I think nobody really has a crystal ball on what prices could do on that front. But just what you've seen, in terms of the current performance, Alex.
Yeah, sure. So I think when you look at Anglo American Platinum, there's two components to it at the moment, right? So the one is the fundamentals of the business, how it's actually performing and what your outlook is on PGM prices. And then secondly, what is Anglo American, the parent company, going to do with their stake in Amplats? Are they going to unbundle it and so forth? Because that will create an overhang means there will be an oversupply of shares, and a lot of these shareholders will receive Amplats shares will not want to have it and then sell it. So it's almost like forced selling. So this is a technical of nature. And that's what we're seeing in the moment in Amplats. But that's why the reason it's underperformed Impala and so forth over the last few months is because of this potential corporate action. And of course, that it didn't perform too well operation. So that's the two components to it. So it's difficult to say, if it's already in price or more can become, because you don't know where it's going to be on the fundamental side of the equation. Personally, I'm a little bit cautious on PGM sector. I think within PGMs, the three main ones, of course, rhodium, palladium, and platinum. Our preference is for platinum, so we actually have a preference for the platinum ETF. To some extent, we think we are taking a bet that price is going to normalize over time. While the likes of palladium, we just had a massive premium over platinum, call it the last 7 or so years. We don't necessarily think it's going to be sustained. And the same on rhodium, went into a bubble territory, then burst. And usually when you burst, it takes time to recover. You don't see a quick recovery. So we don't really see the baskets of the PGM prices doing particularly well. But there are some other factors like supply is coming down and so forth, and demand. It's very, very difficult at the moment. But I'm rather sort of cautious at the moment, and if I want to play it, I'll play it through the ETFs as to the companies.
That's actually a very interesting one, because a lot of people will ask about the miners, but actually quite an interesting one that, if you're looking for exposure, then also there's an option of actually going for an ETF for the actual commodity. Amplats on your side, Graeme, your take on it.
Well, generally, I think almost through every cycle, we are underexposed to commodities because, the business models are cyclical, and it's sometimes difficult to read those cycles. Having said that, in our fund a little while ago, we actually bought some Amplats. And I think the theory there is exactly as Alex was saying. I think it's becoming increasingly difficult, and some of the more marginal producers, I think, will get carried out. So I think generally you'll see supply coming offline. The $1 million question, of course, is with this tilt to EVs, what is the impact going to be? Because we obviously know what the impact on autocat demand will be, but there are other technologies that will start absorbing, I think, some of that. So, my sense is that from a fundamental point of view, I think Amplats may very well be one of the last people standing. Alex makes a great point that, apart from the corporate technicalities around an unbundling, which I think will be some ways off, because there are quite a few people to satisfy, including labor and governments, before you can actually do that. But I think for me, the big thing is that Amplats, I think, will be left standing when many others have had to shut capacity, and that, I think, is going to disrupt the supply-demand dynamic. If you see a small uptick in demand, you could actually find some of these PGMs that have been a little bit soggy of late looking a lot better. So, who knows with forecasting metal prices and currencies and production and grades and everything else. But if you just look at what the market consensus is for Amplats, a slightly better year this year than last year. Obviously, a year or two ago was phenomenal with the price that the metals reached because of supply constraints, and then it'll probably tick up from there. It may be a little bit lonely out in the wilderness, but I think they will be teed up for success. So, what I'm saying is it's a very long roundabout answer to say, I think if you like the PGMs, I think it's probably worth a punt, Amplats. But if you don't have stomach for volatility, and you like, to know what your earnings are going to look like over the next 2 years, this is not one for you. But I think it's actually looking quite interesting, corporate action risk and the overhang risk notwithstanding.
Yeah. Just before we go to a break, I actually want to dig into Naspers and Prosus. Of course, they came out with their results today, had a good market reaction. We don't really have these big tech companies, but Naspers and Prosus offer us exposure into that space. Alex, what did you make? Was the market reaction, or did the numbers justify the market reaction?
I'm going to give a brief comment now because it's my stock pick tonight.
Oh, okay.
But I do like it. I mean, today's results, I think the key component there was that the e-commerce business finally some form of profitability there after many, many years, and also better disclosure, showing you that the IRRs, the returns that generates actually been dismal. So I think this management team of the new CEO coming in, they're a little bit more frank about it and to perhaps unlock some value, which could, be interesting. So now the question is, they will continue with share buybacks, sure, but at some stage they will have to perhaps consider further increase in dividends or look to monetize some of these asset bases before the whole tech sector pulls down, because there's still opportunity to do so. And that can unlock some value. So, but that'll just be another positive to the investment case. So, but I think that's one area that I think today's results probably highlighted, that looks quite interesting.
Well, quite interesting that Alex will be picking Naspers as his stock pick. Would you be looking at Graeme Prosus and Naspers with maybe slightly different lenses or not? Which one would you be going into at this point?
Well, I've always liked the double discount in Naspers. So, if you get a discount on a discount on a discount, I'd rather go to the top of the pile, because it's got to cascade through at some point in time. I think what Alex was saying is right. I think that the current management they're not taking a scalpel to some of the valuations. I mean, some of those write-downs were, quite. I mean, a colleague of mine said, $460 billion is $1 million is a lot of money. So I think in a way the previous management was playing the unicorn game and sort of saying, well, let's just not only be facetious, but throw mud at the wall and see what sticks, because they have a history of finding gems. But I think now the cycle has turned. It's probably back to where it was, I don't know, maybe 15 years ago, after, maybe a little bit more than that, when they had to sort of recalibrate. So I think I like what they're doing in terms of the buybacks. I like the fact that they have turned some of those businesses from loss-making, as Alex said, in terms of, the e-commerce assets. But there's probably still a little bit of writing to come. But the reality of this is, you can argue OLX and classifieds and, food delivery businesses. The reality is the gorilla in the room is Tencent. I think Tencent's a really good story still. I think if anything, it's probably got a better 2-3 years ahead of it than the last 2-3, which have actually been very difficult. So on the back of that, I think Naspers still looks good. But it does feel to me as it's sort of tracked in a range, and you really need Tencent to set the pace. So I like Naspers over Prosus. I think both of them are good assets, but my sense is that I wouldn't be buying them right now myself. I think I'd wait for a little bit more visibility from Tencent.
All right. Let's go into construction. Murray and Roberts. So we'll start off with Murray and Roberts. It's a question on Murray and Roberts and Merafe are attracting big volumes. Panel comment on whether they offer a good recovery play. Starting off with you, Graeme. How much of a bet would you be putting on a sustainable recovery from Murray and Roberts? I was actually looking at its chart, and it seems to have been going since May.
Yeah, but if you look at the 20-year chart, which is what I've got in front of me, it's pretty sad. So I think, like a lot of construction companies, it had a purple patch sort of around the World Cup, and since then it's been awful. I think South Africa needs to build stuff. There's a lot of infrastructure that needs work. I have a real worry about whether we've actually got the technical capacity to do that. But there are a lot of construction companies in South Africa that have been decimated to remnants of their former self. So I think we'll see what this new what the seventh administration does. But if we can get our A's into G, it'll be phenomenal. I think you could see a lot of infrastructure needed, not luxurious stuff, just stuff that we need to maintain life. So I think it could be a very, very interesting place. Murray and Roberts, I don't really have a strong feel for. I've always sort of taken the coward's way on this, and that is, if you want to play construction and engineering in South Africa, I think Wilson Bailey, at $150 or thereabouts, looks to me to be very good. But I would argue that after a decade of underinvestment in our economy and the construction stocks bearing the brunt of that, I think we could actually look forward to a fairly purple patch for them. But, you pick your poison, whether you want, the guys that are kind of, recovering, or if you want to be in the Rolls Royce. Personally, I'd probably just choose Wilson Bailey and be done with it. But I think the sector generally is probably looking forward to an improved outlook.
Yeah, that chart definitely looking quite sad. Reminds me of my bank account with the peak there in 2020 from on payday, and then the rest going, gradually down throughout the month. Alex, Marion Roberts, would you be betting on this one on some level or not? Is it too late?
Look, I mean, investors that betted about a year ago, it paid off for them. Because about a year ago, Marion Roberts was at the real chance of going bankrupt. So I think since then they've been able to reduce the net debt substantially. I think from about 2 billion to 200 million, if I remember correctly. So that's they get the balance sheet significantly. They've also reduced some of the head office costs. I think they turned cash flow positive, if I remember, and so and as a result, because of that, you've seen the massive rally in the share price. Also sold, of course, the Bombela concession. Of that might have been a bit earlier, but that was what they did over the last year. But unfortunately, I don't follow the business that closely enough to really know what the future holds for Marion Roberts. Most likely it could be more upside. I don't know, but it was priced to go to zero. That seems to be off the table for the time being. But I would be cautious. This does have some high risk, this business, and they have always disappointed, regardless of who's in charge at Marion Roberts.
Well, actually, while we're in construction, before we go to Merafe, PPC coming out with its numbers today, swinging from a loss to a profit. Zimbabwe doing really, really well. SA, Botswana, not really as great, but also remembering that Zimbabwe was from a low base. Market reaction not very, market not very responsive to that. Does it signal caution still, Graeme?
Yeah, I think something like PPC, if my scenario of a far more favorable, GDFI environment plays out, there will be a beneficiary. But of course, over the last few years, capacity has come online. I think it's a fairly competitive space. It's become a volume game. So I think everybody's just praying for, telephone numbers of infrastructure spend to be announced. And if that happens, there'll be a beneficiary. But you do get the feeling that, the failure risk that was priced into Murray's a few years ago, it was priced into PPC. They seem to have dodged that bullet. But the question is it a really exciting prospect? So how do you move margins? How do you, in a competitive landscape, how do you do a lot better than you did last year? So I think that's the thing that weighs on me here. If you want to be in that space, then I would probably rather go back to my default answer. And if you believe in the GDFI story, then go to somebody where, maybe they can manage the margins a little bit better and where they're naturally just more profitable and a more nimble business model, and go for somebody like Wilson Bailey. So I think it's a tough space. Unfortunately, they had a few strategic missteps, went into Africa at the wrong time, and other people were then investing in probably more efficient plant in South Africa. And I think that is, for me, the thing that worries me about the sector.
Yeah. Alex, would you put PPC as one of the construction counters on the back foot?
Look, it's been in the back foot over the last decade plus because of the dismal economic growth in South Africa, overcapacity, imports, a lot of own goals they scored, specifically in expansion to Africa, which was disastrous. But the previous management team has cleaned up most of those legacy issues. And today the business is much better positioned. Obviously, the new management coming in here has identified new inefficiencies we're looking to address. And it's easy to understand why, because if you look at the SA and Botswana cement business, it's generating EBITDA margins, I think, some in the region of 11%, which is dismal for such a cement type of a capital-intensive business. I mean, cement business should be at least 20%, if not close to 50% or so, perhaps even higher when it was on its peak. But obviously, due to oversupply issues, all the problems we have in South Africa, that's as best they could do at the moment. So that shows you the upside optionality if things do recover. but also the plants, I guess, is a bit older and so forth. But that margin is not significant enough to really produce significant enough free cash flow and to make it worthwhile to invest in new capacity or to upgrade your capacity. So I think that's an issue. That's a structural issue we have in South Africa, and also something to be cognizant of. With Afrimat buying into Lafarge, they're also going to get the cement component there. That business is currently loss making, and I think Afrimat's targeting to get break even, but pretty much means you're going to have more severe competition in that market, which is already overtraded, as Graeme referred to. So it's going to be tough. It needs GDP growth to be, call it 2-3%. That's the case, then these companies are well positioned. But other than that, they're going to be under going forward.
All right, let's go back to commodities. Merafe, also the viewer saying attracting big volumes. Yeah, would you be betting on the stock's been quite volatile? Yeah, at least for the last year. Graeme, is this one that you do look at?
No, I think it's too narrow in its product segment, you know. So again, come back to what I was saying around commodities. We generally, you know, we like the lower cost, higher visibility producers. So if you want to be in commodities through cycles, I would generally be in somebody like BHP Billiton, because, you know, whether the iron ore price is $140 a ton or $100 a ton, they're going to make really good money. It's just the question of what the margin looks like. And arguably those guys use weak environments, as you saw them circling around Anglos not long ago. So, you know, when we play commodities, we generally play the big guys, the diversifieds. You know, and a ferrochrome producer would not really be in our orbit, because, you know, sometimes you get it right. If you bought it in 2020, you'd look like a hero. You would have, you know, probably tripled your money, if not more. But you know, it's too wild for us. And I think the chrome market is fairly tight, but I think demand is also not exactly running away. So, you know, we generally cowards. We try and invest in things that won't hurt us too much. Even then, sometimes it's quite difficult to do that. So I'd rather really avoid the commodities, single commodity particularly.
Yeah, single commodity, small. Alex, would you be staying away from it, or do you think that there's some value to be found there?
Look, I mean, it's a phenomenal dividend payer, Merafe. I think the dividend yield is original 20% at the moment. For ferrochrome and chrome prices holding up, you know, that's relatively attractive. They could always be, I guess, taken out further by Glencore. But Glencore is so small in their bigger scheme, and obviously Glencore focuses on other things. But other than that, I really don't see capital returns being that lucrative. It's looked cheap. It's looked cheap for years. But it does pay a good yield. And if you can time it right, buying at bottom of the cycle, and you can make a bit of a recovery plus the dividends, you know, it could be a lucrative trade. But that's a trade. I don't say it's investment. So you look at it perhaps on a 6-12 month horizon, if you can buy at the wrong time, but be cognizant the risks are quite high.
Alex, sticking with you, you did mention that your stock pick for today is Naspers. Your additions on that?
Yeah, so I guess a little boring for the viewers out there, but I think I do want to highlight that this business does look very, very attractive. So I alluded to the e-commerce component. So it was the Tencent. They delivered very good results, update recently. We think their fundamental growth rate still looks very, very attractive. There is still lots of monetization opportunities within there, a lot of associate stakes, you know, business they own there that they can actually unbundle or sell. We think the hopefully regulatory environment is not as severe as it was over the last few years, and that will also boost further growth for them. And then of course you've got a share buyback component in that obviously adds a lot of value in our view. So we think that at these levels, and if things do pan out as we expect, there could be sizable upside potential. Plus, you get the additional options on Naspers from e-commerce, perhaps higher dividends and so forth. We can see there as well.
All right. What are you picking today, Graeme?
I'm going to go with African Rainbow Capital, and ironically, it's almost a similar theme to what Alex is saying. You know, if you look at African Rainbow Capital, it's trading at, call it about half of its net asset value. The market obviously very worried about the RAIN valuation, or I think they're worried about the RAIN valuation. But, you know, in a roundabout way, although they've got a big financial services component, I would argue that TimeBank is almost more of a technology play or a fintech play than it is a financial services play. And you know, it could be a unicorn in its own right. So I think there are lots of parts of this business that are looking a lot better. If you just look at things like Alex Forbes, for example. So, what I'm saying is I think you've got some really good assets, and you've got other assets that are really exciting and could do phenomenally well. And you just take Time Bank; it's profitable at the moment. This international expansion, you've seen Tencent, for example, also getting into Time Global. So I think what you're doing is you're buying a decent NAV run by very capable people at a deep discount, and some of that NAV it actually offers you almost like unicorn type optionality, I think, with relatively limited downside. So I'll go with African Rainbow Capital.
All right. Well, thank you so much for your analysis today, gents. That is all for tonight's Stock Watch. Thanks to our guests, Alex Duys from Umthombo Wealth and Graeme Körner from Körner Perspective. Up next, The Close. Stay tuned.